It's time for business. Let's say hello to Kate Moody.
François.
A sixth day of demonstrations since strikes here in France against pension reform began a little over a month ago. So the lowdown for today is we know that the number of people on strike is up for this day. We know the number of people marching in the street is slightly down, according to the unions. What about the cost?
Well, we're getting some numbers in from France's central bank, which says that the almost total halt of transport in the month of December has shaved 0.1% off the country's GDP growth. Of course, the longer this movement continues, the more widespread its effects. You can see some of the figures here that the expansion for 2019 as a whole is estimated at only 1.3 for all of France. So that's still a significant drop there just for the month of December. 10% of all businesses across the country have been impacted. Hotels, restaurants, and retailers are the hardest hit. The negative effects are also more concentrated in the Paris region, where public transport remains limited. Shops said their holiday takings were as much as 50% lower than normal in December. Fnac Darty, the group which sells consumer electronics and household appliances, has said this Thursday it lost 70 million euros in December because of the strikes, while freight operators are losing as much as €1 million every day. Well, a day after the U.S. and China signed their long-awaited trade truce, the U.S. Senate has overwhelmingly approved another major trade deal. Senators voted 90-10 in favor of the U.S.-Mexico-Canada Agreement, or USMCA. It, of course, was negotiated to replace NAFTA. President Donald Trump is expected to sign the bill into law quickly, senators hailing it as another bipartisan victory for the president on the heels of that U.S.-China trade deal. More on that story as we get it in. Well, the European Union's trade chief says the bloc will be reading the fine print of that Phase 1 trade deal that was struck between Washington and Beijing to make sure that it's compliant with global rules. Trade Commissioner Phil Hogan said some details remain unclear. He's in Washington for talks about another brewing trade spat. Washington has threatened to impose tariffs on 2.4 billion euros worth of French imports if Paris doesn't roll back a tax on tech companies. Separately, Germany has confirmed reports that the U.S. is also threatening to target European cars with tariffs if EU governments continue to back the Iran nuclear deal. Analysts say it's just another reminder that the Trump administration is still ready to use tariffs and trade ties as leverage in a number of international disputes. Well, global markets have largely welcomed that trade deal between the U.S. and China. We're seeing Wall Street soaring to yet new highs once again. The Dow Jones adding about 150 points, firmly above the 29,000 mark, which it crossed for the first time earlier this week. The S&P 500, meanwhile, has broken above 3,300 for the first time. Shares of Morgan Stanley up 8% as the investment bank beat expectations with its fourth quarter earnings. We saw a bit more caution earlier on the major European indices, just the CAC 40 finishing slightly higher, the London FTSE 100 down about 0.4% at the close. Germany has said it will phase out coal power in the next 18 years. The government has agreed to pay out compensation to companies and regions that will be the most affected. Environmental activists have urged an even faster transition, as Sam Bradpeace reports.
Once the heartlands of German industry, the country's coal regions have fallen on hard times as Europe's biggest economy moved away from heavy industry and towards renewables. Now the government is pushing to eliminate coal-fired power plants by 2038, if not sooner.
We're the first country that's getting rid of nuclear and coal power on a binding basis. This sends an important international message.
So how is the German government shutting down these operations, particularly in the less prosperous east where lignite or brown coal mining is a much-needed source of income? The answer is money. The government has struck a €40 billion deal with 4 regions to compensate for economic losses. On top of this, heavily polluting coal-fired power plants in western Germany will receive €2.6 billion for an early shutdown, while €1.75 billion would go to plants in the east. Brown coal generates about 19% of the country's electricity, but is considered the most polluting type of coal, partly because its low energy density means greater quantities must be burnt. With coal and nuclear on the way out, Germany must make up the shortfall with increased natural gas and renewable production. Environmental campaigners are worried that in the midst of a climate breakdown, 2038 is too late to stop burning coal, noting that a new plant is due to be built this year.
There you go, 2038, Francois.
All right, many thanks for that. Kate